Good afternoon, everybody. Thank you very much for joining us for this first event in partnership between Founders Factory Africa and AfricArena. We are super happy to have you. This is actually the first event of the series African Startup Investment Summit, which is a series of 3 events, and Rachel is going to tell you a bit more afterward. So just to give you a bit more about the situation, firstly, I'm Valentin from AfricArena team, and I'm working on our investor relations. Because we are at the moment in a complicated situation for many African startups, we've decided to join forces between Founder Factory Africa and AfricArena to set up a series of events to give tangible and concrete insights from founders, investors, and other key stakeholders that are adapting to the current situation by strong measures. So we're going to start this first event by giving you a bit more insight about what we are doing at AfricArena and Founders Factory. Then we're going to have the chance to hear from Sarah Desek, Meg Ford, and Emilian Popa about how they are adapting their businesses to the current situation, how they are supporting their portfolio companies, and much more about very concrete advice. We're going to have the chance afterward to have a deep dive into financing, alternative financing tools, because usual ways of getting finance may not be available as usual or more complicated to access. So we're going to talk about venture debt and crowdfunding. And afterward, we're going to announce some initiatives that we are taking and making with the broader community of investors, incubators, and ecosystem partners to facilitate access to capital for startups that need it in the short term. To give you a bit more insight about what we are doing at AfricArena, AfricArena has been in existence for 3 years now. We are the cornerstone between entrepreneurs, investors, and ecosystem partners. We've been doing a lot of open innovation challenges with different corporates in sectors such as healthcare, financial services, mobility, and many more to help them innovate with the most promising startups of the continent. Every year, we've been scouting the continent, going in the most of the biggest tech hubs to meet with local startups, to meet with investors and incubators, accelerators, policymakers, and try to connect the different ecosystems that are sometimes a bit too fragmented. And finally, at the end of each year, we have the chance to invite for a final summit in Cape Town the 100 best startups that we've been meeting over the year, and to invite investors and other ecosystem stakeholders to meet, connect, and generate opportunities for the startup, such as access to financing or access to business contracts. We've got the chance to release our new report 2 days ago through an event. As we've been scouting the continent over the last year, we've met hundreds of different stakeholders, and we're happy to release this report, which is highlighting the most dynamic sectors, the state of tech investment in Africa, the role of incubators, the role of accelerators, and insights about corporate open innovation strategies, and much more. So if you would like to have a look, don't hesitate to go in the link, africarena.com/report 2020. And you can also have a look at the replay of yesterday's event on our Facebook page. And I'm happy to introduce now to Rajiv Daya from Founders Factory Africa, who's head of investment for this great accelerator. Rajiv, stand is yours.
Thank you very much, Valentin, and a very warm welcome to everyone who's taken the time to join us today. It's wonderful to have you with us, and hope that you are staying safe in isolation. Valentin, I'm glad that you've handed over on the slide which shows your report, because I think it's a great segue into what we do at FFA. For those of you who did see the report, which I looked at last night, you may recall that one of the key limitations that was identified for incubators and accelerators on the continent, and this is according to the survey, is a lack of access to an operational team. And that is really fundamental to our existence as Founders Factory Africa. So I didn't plan for that to be the outcome. It just happens to be that way. So as our name suggests, Founders Factory Africa, really, we pride ourselves on supporting the interest of founders in the markets that we serve. And we do that by providing access to this full-time team of specialists and operators. And we do that by co-building businesses. And we do that with amazing entrepreneurs. Some of the wonderful terms that I've heard is for what we do: venture builders, venture catalysts, adventure capitalists, and I love them all. I will say that we share all of these sentiments, and really we aim to be founder-centric and stimulate early-stage investment on the African continent. So that's what we do. As you can see on the slide, there are a couple of ways that we execute that. Of course, underpinning all of this is a full-time team of operators. We have a global network. We're present in London, Paris, New York, Johannesburg. So we're global in our reach. And we also pride ourselves on unlocking corporate resources and access to distribution channels and other skills. So at Founders Factory, from an investment standpoint, we're quite fortunate to have the vantage point at the intersection of this founder-investor relationship, because we're constantly engaging with both sides of the table on a daily basis. And what we've come to realize is that, of course, uncertainty brings about speculation. Speculation brings about fear. Fear brings about panic. And panic brings about a biased narrative. So the whole idea behind this series is really simple. How do we focus on the facts, avoid a speculative narrative, and really provide a platform to amplify the messages of those who are acting, those who are pivoting, those who are raising funds, and those who are not, to be completely objective. But more importantly, we want all of this to be wrapped in an action-oriented and solution-driven discourse. Earlier on this year, for some of you who were at the annual SABCA conference during the discussion around the $1 Trillion Coach book, you may have remembered a phrase that was used, and it's very clear in my mind that for a startup, their greatest competitive advantage is their ability to be agile. And now more than ever, we're seeing that agility, we're seeing that resilience, and that's really what we want to focus on today. But before we go on, I think that agility and resilience is not just about the startups themselves or the founders. It's incumbent upon us as investors and ecosystem enablers. And so with that, we have a series of events, as you can see, which will, in the following weeks, focus on investors specifically, as well as ecosystem enablers, again, focusing on the tangible outcomes and solutions that we're seeing in the market. So with that, I hope that we deliver on the promise of solution-oriented and tangible outcomes. And I'm going to jump straight into the first panel. So thank you very much to our speakers, Sarah, Meg, and Emilian, who have made themselves available. Before we jump in, I'm going to ask those who are listening to please send through any questions you have for our panelists through the chat. We'll pick them up and we'll either address them during the conversation or respond directly in the chat. So thank you very much to our speakers. I'm going to let you introduce yourselves and then we'll jump right in. Sarah, do you want to start?
Absolutely, my pleasure. I'm Sarah Dusuk, co-founder and general managing partner of Enigma Ventures, a new fund that we launched in 2019 to focus on investing in women entrepreneurs in Southern Africa.
Thank you very much. Meg?
I'm Meg Fora. I'm the founder and CEO of PlaySense, which is an in-home playgroup program, which we recently had to pivot because obviously all schools are now also in lockdown. And we have engaged with Enigma Ventures as our venture capital partner.
Fantastic. And last but certainly not least, Emilian.
Thanks. I'm Emilian. I'm the CEO of Ilara Health, which is a diagnostics technology company based in Kenya. I've been an investor and entrepreneur focused on Africa for the past 12 years.
Great, thank you very much. So let's start from the founder perspective. Meg, Emilian, I'm sure that there are many founders and entrepreneurs on this call who will agree with me when I say that if they had $1 for every time they heard the words, you now need to extend your runway, then they wouldn't need to go out and raise in the first place. So for those funders or founders who constantly hear this from the market right now, the question to you is, on the one hand, you can cut costs, but that often means cutting people. It means reducing your growth, reducing your traction. And then down the line, that makes it harder to then go back to the market and ask for money. So what is the balance between reducing your cost to stay alive and continuing to generate traction and revenue during these types of periods?
Yeah, so what we did from my perspective is when we knew that there was going to be a downturn, because we knew that our parents were going to want to stop paying fees potentially for their play groups because of their fear of what was going to happen economically. I did actually start to bootstrap and think about extending the runway. And I do think it is important as a founder to make sure, or certainly as a CEO, to make sure that you have got longevity in terms of your cash flow and make it stretch. Having said that, what I did was I asked my team to work harder for less, painting a picture for them of the fact that we needed to come out of this alive at the end of it. And my team was amazing when it came to that, because I was able to cut back on some costs immediately as soon as we went into lockdown. And then fortunately, with the investment that we've had, we've been able to look and go, right, we actually now are going into a massive growth phase because of the potential that we have. And so we haven't got the same concern around extending the runway. What we've been able to do is we've been able to say we've still got to be clever, but we now really do need to focus on marketing to capture this opportunity.
Yeah, very much the same on our side. Look, I think every entrepreneur is focused on every single cent, every single dollar coming out of our companies is important. And this is even more important in a period of a crisis. On our side, we kept being very conservative on the spend, focus on only the product lines which bring immediate revenue, and we pushed farther down the line the more innovative but with no immediate cash revenue or profitability. At the same time, we reduced salaries for some of the team members, including myself, to be able to extend our runway. And I think this is something which is super important. And it's not only during the crisis. I strongly believe that a startup needs to have 12, 18 months runway and not, realize that 3 months down the line there is no more money.
Got it. Just on that point, because you've both done an incredible job in figuring out that inflection point, or the moment at which you decide I now need to pull the trigger and pivot. If I look at it very simplistically, and I'm an entrepreneur today, I've got a couple of options, right? I either figure out a way to pivot, maybe change my value proposition. I can double down on existing customers, ask for upfront commitments. I could generate revenue from alternative sources altogether, or I could shut down. So when you look at that pivot that you've both done successfully, what is the moment, or what are the criteria by which you decide that this is time for me to pivot and I need to do things slightly differently?
Yeah, so what happened with us was I just immediately got into the head of my consumer immediately. So I knew before lockdown even happened that the first thing that parents would want to be cutting is childcare that they weren't getting because they were going to be caring for their children themselves. So getting into their head, I immediately thought, what can we possibly do to make this part of the journey of caring for a child in a home now, as opposed to being able to send them to school easier? And I do think that if that is at the heart of your pivot, in other words, if you're thinking about everything from your consumer's perspective, it's easy to pivot very, very quickly. So that's what we did. We said, we understand that our old offering is now no longer valid in the current situation, and our customer base would very quickly dwindle. And so we were able to pivot. And what we did was we used technology, and I got my team to over 72 hours, pretty much working nonstop, 18 hours a day, to transform what had been a teacher delivery portal of a curriculum through to a parent delivery portal. And so we used technology to very rapidly actually deliver to parents what we believed at that moment they needed. And that was how our pivot happened. And it happened within the first, as I say, 72 hours of lockdown.
Yeah, in our case, it hasn't been really a pivot. We're in healthcare. So, our business as usual is placing point of care diagnostic devices in suburban small medical centers around Nairobi. So that's something which continues even more now. So we've been growing a lot in the past 2 months. We rather actually added on top of what we're doing a couple of products and services specifically directed to prepare those clinics for COVID. Anywhere from assessment tools, so an online tool that we developed and we pushed to our clinics and to the patients of the clinics, to specific products, diagnostic devices, which they don't diagnose directly COVID, because we can't do that in Kenya, but diagnose preconditions and postconditions, and down to even being ready to print to 3D print ventilators. So we purchased 2 3D printers and are ready to 3D print ventilators if there is a need and protection. So it's rather edit products and services to an existing business and pushing the existing business farther. And within the existing business, obviously trying to make sure that we keep collecting the cash on our leasing model, and make sure that we help the clients understand if they can't pay, what's the reason they can't pay.
Great. Sarah, I'm coming to you shortly. Investors have all the power in the investor-founder dynamic, so I'm going to make you wait just a minute more. Emilian and Meg, for entrepreneurs and business owners who have seen on LinkedIn and just over the internet in general over the last couple of weeks, there's been an abundance of posts about resources that are available during this time to small business. Can you please clarify from your experience and from what you've seen whether those are relevant to the startup environment, or whether that's a different type of business altogether? Just to kind of understand what is relevant and what founders should be pursuing that they have a realistic chance of accessing.
Yeah, so the only one that we have actually actively gone for, and I've seen many out there, is one that was a specific COVID-19 call for support for people who are in lockdown. And we knew that our service was something that was very specific to being in lockdown, because it's an in-home education program and or an at-home education program. So we've been very targeted, and we have pitched for one other piece of funding, but it was very specific to COVID-19, and we believe we have a solution for that. So for the rest, we really we don't have the time, to be honest with you, in the middle of a pivot and going through the due diligence process that we've just been through. We haven't had the time to pursue anything else.
Look, on our side, I think there's a lot, as you said, there are a lot of resources available there, and we're bombarded with potential sources of grant funding or other funding for COVID. So I think what I've seen on the kind of the private side, entrepreneurs got together and investors got together to support. On the public side, I think we're less fortunate, sitting in Africa. I think South Africa is a bit different, but sitting in Kenya, there's not much support from the government on the startup side. But again, on the grant funding, we actually applied we have a team applying to grants continuously, because we're a healthcare company, so very impactful. We've got actually a grant a month ago, just before the COVID kicked in, and which is now repurposed for COVID specifically. And we have 5 or 6 applications ongoing now for COVID specific grants.
Great. Sarah, I've kept you waiting. You've recently announced a new fund. So firstly, congratulations. I know it must have been tricky to do that in the current environment. My question to you is twofold. Firstly, how important was it for you to look at and revise your criteria for investment? And secondly, in the short period of time that has been in the market, what are the kinds of responses you are seeing by way of applications, thematically and the solutions that people are trying to bring to market?
Yeah, well, just like the entrepreneur sort of founder conversation, we too were thinking about how do we pivot our fund to focus on the challenges at hand. And I think what we realized very, very early as COVID started to hit Africa was now we're seeing this disease spread across the globe, literally everywhere. This is a fundamentally huge moment in time where we're going to see a shift in the way we travel, the way we spend, what we do, what we don't do, where we can go. Our lives are forever going to be impacted by this moment in time, which made us think this is an opportunity. This is an opportunity to change and drive change, fundamentally to move forward and move into a new way of living, a new way of doing business, a new way of being each nation that we are, and collectively being humanity. And so how do we think about investing money and focusing money on solutions that will help us shift and move into a new world? And so that's what we started to think about. And we started to think about how do we are passionate about startups, passionate about entrepreneurs, passionate about Africa. I am a firm believer that this moment in time could be a moment for Africa where she leapfrogs, where we don't have to play catch up with the West, and we don't have to play catch up with America. We actually get to leapfrog into our own destiny here and say, let's take advantage of this moment in time to solve problems that we've not been able to solve for generations. How do we tackle inequality? How do we tackle access to healthcare? How do we tackle huge issues between the rich and the poor? And now is this moment. And so that really was the catalyst for us with thinking about a new fund and thinking about how do we deploy capital to help build the world that we would like to see going forward in the future.
Great, thanks. One of the reasons that we're very fortunate to have both you and Meg on the same call is this discussion is really about that dynamic between founders and investors during good times and bad, but especially during the more difficult times, because that's where these sorts of relationships, because these are long-term partnerships, and that's how we kind of test these partnerships. So it would be wonderful for the two of you to walk us through closing your recent deal during a time of uncertainty with increased risk, and the nuances that are associated with that. I'm sure that there are entrepreneurs, founders who are listening, who would love to close deals, but are perhaps unsure of how that practically pans out in the current environment as far as uncertainty is concerned. So feel free to share the good, the bad, the ugly. We're here to learn from the experience of making it through these times.
I'll maybe let Meg share the ugly. Not that we had any ugly, but I think most investors at the moment, obviously there's huge caution in the marketplace in terms about making investments at this time, just simply because the future is so unknown and so difficult to predict what will happen. From my perspective though, as I said earlier, I think this is a huge moment of opportunity in time. We're at the very bottom of a cycle, and hopefully the only direction that we go after hitting the bottom of a cycle is up. And so now is a great time to be making investments and a great time to be investing in our future. It does mean we have to think as we've always had to think, but it does mean maybe we have to think even further ahead than we've been thinking before, and thinking about investing in an earlier stage than maybe we've all wanted to think about before, just because we're having to drive so much change. What is missing here in Africa is a vibrant investor ecosystem where we have seed funders selling investments to venture funds and venture funds selling investments to private equity funds and private equity funds selling, you know, there's not a lot happening amongst us in terms of doing deals amongst us, and we need to see more of that. And I think we need to be more willing to partner with each other in order to help move things from seed to growth to established size. So that's sort of one of the challenges, I think, of the existing space, and one of the problems that we need to fix. There's not a lack of talent here. There's just often a lack of networks and a lack of opportunity and a lot of capital being deployed. And our focus particularly originally is to focus on women. Women are historically horrifically underfunded across the globe. And so wanting to solve an inequality problem and a lack of access problem, and share my own experiences as an entrepreneur, not as an investor. I spent the last 10 years of my life building a large company in the States, which I sold, and bringing my experience of that journey and all the frustrations of dealing with investors through that journey to my own experience now to being the investor. So that is what we are hoping to do, and hoping to do better than my own experience historically.
Yeah, I think from our perspective, I mean, to share a little bit about the journey of actually closing the deal. First of all, there was some negotiation, and I don't like negotiation at the best of times, but there was some negotiation around numbers and terms. And one of the things I think for people who are pivoting in this moment, and it definitely worked, I think, to our advantage, I hope Sarah would agree, is that when we were discussing what was going to happen, I was able to present that we were actually presenting two business opportunities. We had our original business opportunity, which will re-exist absolutely after lockdown, but our pivot was a double opportunity. And I think that really stood us in good stead at the negotiating table, where Enigma Ventures could recognize that actually coming out of this, we are going to have two potential business opportunities. So that was hard, I would say, but a good perspective. The other thing that I would advise anybody going into negotiations now is to have a lawyer who doesn't, and he kept saying to me, he's not going to over lawyer things. And he sat with me a number of times and over Zoom and said to me, Meg, nobody is investing right now. You do not have room to chase down every single tiny little thing. You know, it was a very, very fair deal. And it's particularly after we had negotiated around the two potential business models. And he recommended to me to move without getting stuck in the detail. And I do think, I mean, having said all of that, we were dealing with exceptionally fair VC funds. Sarah and Jake were incredible from that perspective. But we also didn't go and chase down everything, because we knew that it just wasn't the climate to be doing that right now. And I think what we've ended up with, certainly from my perspective, but I would believe from Enigma as well, has been something that is fair and equitable, and that we both feel, you know, we haven't had to overly compromise.
Got it. So just on that point on investment, you know, that's the narrative that we see also, which is quite pessimistic. Well, no one's investing, cash is dried up. Can you just walk us through, and this is open to all of you, whether that is a true reflection of reality, and if there are deals to be done right now, what are you seeing as the impact on term sheet adjustments, valuation? So where deals are being done, are they being done at significantly different valuations?
I mean, I'll maybe kick this. So I look at it from both an entrepreneur, but also as an investor with an investor hat. Look, I think in those crises, obviously everyone is more conservative, right? We don't know how long the crisis will be. We don't know the impacts, but finally, I think this is an amazing opportunity to identify great entrepreneurs, people who can not only succeed, not only survive, but actually thrive through this type of crisis. So I think for investors, it's a great way to get deal flow and to identify those entrepreneurs which are amazing. On the other side, is also, you know, one can look at with an opportunistic view. You know, if you were to buy, I don't know, if you were to buy equities, right? Would Would you buy Zoom because it's just a short-term, maybe a short-term growth? Would you buy Boeing who's going down, or would you buy Amazon because it's been a good company and it keeps growing and it's even better now? So the way I look at it is really, yes, there is a crisis, but there is no complete. I mean, the powder is still there. Maybe it's taking longer. Maybe we need to show from an entrepreneurial perspective and startup perspective that we actually can survive, can get results, and then it's always possible to get money.
I would agree.
Anything?
I would totally echo that, and I would also say that investors are looking for great horses and great jockeys, and that's the way to think about that as an entrepreneur. Am I a great jockey? So what makes me a good jockey? Am I capable of winning races? Am I presenting myself? Am I behaving? Am I communicating? Am I inspiring confidence? Am I communicating in such a way that somebody would feel like they would be crazy to not back me? So that's am I a great jockey? And then do I have a great horse? As Emilian said, investors are looking for great companies that can survive crises, right? And we all know there will be many, many companies that will not survive this crisis. Many will, but many will not. And that is the reality. Even in normal circumstances, in good times, not all startups make it, and nor should they. 1 in 5 businesses will die within the first 3 years of its life. That's a normal statistic, and the reality is everybody in their course of their lifetime experiences good luck and bad luck. The first business I ever started failed because of the 2006-07 great financial crash. The business I launched in the middle of the crash in 2009, I sold for $100 million. So good luck and bad luck is not the issue here. COVID is not the issue. The issue is, how do I harness this moment? How do I build a company that can withstand challenge, withstand difficult times, and take advantage of the situation and persevere and develop something that is truly extraordinary and truly amazing to move us into the future? And that's how we have to be thinking at this moment. And am I investable in by being a great jockey? And do I have a good horse that can go around the lap, go around the racetrack more than once?
Yeah, just to echo, just to echo this, Sarah, I think relationships are super important. So indeed, So if someone goes out now and tries to raise money, from a completely new fund or new investor with no relationship behind before, may be difficult. But as entrepreneurs, we always raise money, right? We keep building relationships, nurturing those relationships, making those investors comfortable. And I think in those periods, it's even more powerful, kind of the strength or the power of those relationships.
Absolutely. And I have folks who reached out to us 6 months ago, and I said, you're not ready yet. You're not ready to get on board. And I emailed last week and said, hey, we have a new fund launching. You should reach out to me right now. You should be talking right now. You should be telling me where you're at. You should be telling me what you've done in the last 6 months. You should be continuing to nurture those relationships. That it shouldn't be on me, actually. That should be on the entrepreneur to keep those relationships and that communication warm and friendly, so that when the moment is right, that you have a relationship that you can call on and go, hey, look what I've done now. And let's see if now is the right moment.
Great, thanks. Just a reminder to everyone to keep your questions coming on the chat while we're on that topic of relationships, and there is capital to be deployed. I've been thinking about this from a thematic standpoint. So help me frame that thinking. I'm looking at this from the perspective of, is this a catalytic environment or a crisis? And what I mean by that is, are we simply going through an environment right now which is catalytic and is just accelerating the process by which we're separating the good businesses from the bad? Or should we be thinking about it as a short-term crisis, and we should only be dealing with the short-term implications. It sounds like, given that there is capital to be deployed for businesses that would have received money anyway, that the current environment is more catalytic, if anything.
I would definitely say it's catalytic. This is a crisis, without a doubt. We will overcome the crisis. The crisis could last a long time, though. I think current expectations are that we are going to be living with COVID-19 in some form or another and dealing with it in some form or another for the next 2 years. It isn't going to be something that disappears next week after lockdown ends. That is not going to be our reality. And so the way to think about this is, how do we use the crisis to be a catalyst for change? How do I allow it to change my business? How do I allow it to change the way we do life? And how can I allow it to disrupt me so I can disrupt an old way of life and an old way of doing business in order to move us forward into the future?
Yeah, and I think from my perspective, I think that's the exciting part about this. I think we get the chance now to rejig things completely. I mean, the education system has been flawed for years and years. We have lived with an industrial education system where children go into schools and are taught things that they can learn in 5 minutes on the internet. It makes no sense. And at the end of this, life is not going to return to normal in terms of education. Maybe other sectors of the economy, but certainly not education. This is a catalyst. We will not be the same after this.
Great. And then just as a follow-up to that, and from an investor standpoint, how does that then impact the way you view investment opportunities from a risk standpoint? Does that change, if at all? If I am I'm a founder right now, do I target angel investors who are perhaps more agile and able to act quicker? Do I continue to pursue institutional fund managers? How do I go about prioritizing?
Well, I think the first question to ask yourself is, do I have a startup? Do I have a business that could or will thrive in the next 2 years of life looking different than it has looked prior to lockdown and prior to COVID-19? So is my business relevant for the future that we're moving into? Could it survive? Is it useful? Is it potentially, can it grow in the next season, or am I going to have to sit and wait? If you're going to have to sit and wait, don't bother asking anybody for funds. That is nothing's gonna happen. If you have something that's scalable, growable, investable in during this season, this will be a transition period of our lifetimes. And so can you build something during this time that will continue to exist when we move into a completely new era that is established and becomes our norm? Then you're investable in. And I think venture funds invest in seed rounds. They invest in Series A, B, C, D, and E, and they go the whole spectrum. Angel funds typically invest in very, very, very early stage. We, as a venture fund who don't normally invest in seed rounds, only normally invest in growth rounds, have pivoted to also invest in seed rounds. So every fund will be looking at the dry powder that they've got available and looking at how do they want to invest this, what do we want to focus on, how does this adjust our strategy, and how are we going to think about what's going to be relevant in the days and weeks and months and years ahead. So I think everybody will be adjusting how they think about risk, but the one big factor will be, how relevant will this business be in a new world that we are moving towards?
Fantastic. I'm going to ask all of you to give me your final comments, and my final question to you to incorporate into that is this the time for technology to shine on the African continent and take us out of the current environment? Or are we going to start to see a reversion to the real economy because we simply don't have the enabling environment for for technology to flourish? That's my final question to you. Final thoughts from the three of you.
So yeah, look, I think technology has been always, Africa has been always about using technology in together with fixed assets and together with something else. It's not just pure technology, right? It's technology-enabled businesses. I think in those times, it's even more about technology-enabled, not pure technology. And I don't think we can solve the COVID crisis just through tech. People need assets. People need to move. People need to survive. So, just to say, technology together with complements of the technology was a solution yesterday. It's even more today, and it's going to continue to be there.
Yeah, I mean, I think from the education perspective, I do think that technology is going to be essential in Africa, and I think that this is one of the most exciting things that you know, that if governments now invest in both the hardware and the data, the Wi-Fi and the data channels, we can see a terrible inequality in education being changed through this period. So from my perspective, I think it is reliant on technology for Africa. I know that we've got a long way to go. We're far behind the rest of the world in many respects. But I would say that this is going to be the catalyst for that change. And I think it's about time, because it could take really quality education into very rural areas and to very disenfranchised communities. And that ultimately, if that's what comes out of COVID, then wow, that's amazing for Africa.
I would agree. Tech is an incredible phenomenon that is a catalyst, it's an enabler. But I think as long as we remember that tech isn't the solution, we are the solution, and tech enables it to happen. And tech is our tool that we get to lever. And the question is, how do we lever it? And that's what we have to solve for, and that's what we have to think about, I think.
On that positive note, thank you very much to all three of you for your time. And I'm sure that we'll have follow-ups, and we look forward to hearing a lot more from you. Thank you very much. We are moving on to the second session. So the first session was very, very much focused on venture and early stage investing from an equity perspective. We now want to ask the question, well, what are the alternatives? And should we even look at some of these tools as alternatives? So joining us right now, we have Amanda and Elizabeth. Please go ahead and introduce yourselves, and we'll jump right in.
Sure. Thanks for having us. My name is Amanda Cotterman. I'm based in Nairobi. I've been here for 8 years, and I'm the founder and managing partner of Equilife Capital, which is a venture debt provider specifically focusing on East Africa and educating the continent on the asset class of venture debt.
Hi everyone, I'm Elizabeth Howard, based in Cape Town. I was a former founder of an equity crowdfunding platform called Lelapo Fund between France and Kenya. And now I am the acting CEO of the African Crowdfunding Association, which is an industry association for all African crowdfunding platforms.
Great, thank you both very much. And I think we should start at the very beginning. Amanda, if I've exhausted equity options, can you please explain to me what is venture debt? Am I even eligible to apply for venture debt? What type of business or founder do I even have to be?
Sure, that's a good question, and it's not an asset class that can be used in all businesses, but our goal is to have it be one that can broaden the larger venture ecosystem. Venture debt is a commercial debt instrument that minimizes the dilution for both entrepreneurs and equity investors in a venture-backed business to provide additional liquidity to extend the runway, to prove out a specific aspect of the business in its growth story, so that the next round hopefully comes at a better valuation and helps the company get to that level. It is usually in more mature markets a debt instrument that is priced for the risk and has an option or warrant component to it, which is kind of the icing on the cake for the lender taking on this risk. But it is a debt instrument. It is, you know, a lender is taking debt risk, not equity risk. So it has to be serviced, meaning the interest has to get paid, and the debt must be repaid over, you know, the tenor of the loan.
So based on that, I have a startup. I have very inconsistent cash flows. I'm not cash flow positive. I can't service interest. Is venture debt an option for me?
Yes and no. In other markets, more mature venture capital markets, it might be an option. From our experience, you know, looking at businesses in Africa and investing specifically in East Africa, it might not be the right fit. And the reason I say that is in the rest of the world, you usually have raised a round and you have 12 to 18 month cash reserve, and this debt is coming on as additional cash. And so even if you haven't hit cash flow positive, or maybe you kind of oscillate around that, you have cash from your equity round that can be used to help service that debt. And the whole idea is this extra cash allows you to grow faster and bigger. The reality is we're still learning in Africa across different countries how to adapt our business models as startups and venture businesses. And so we're not always growing as fast, and the options of growing big aren't quite there. So you really want to make sure you can protect yourself as an entrepreneur and business owner to have cash to be able to service that debt. So we do look at businesses that are on a very close path to cash flow positive or oscillate around that on a monthly basis, so they don't get themselves in a tricky situation.
And have you seen, well, firstly, you've been very agile yourself to go with the theme of the day in being very responsive to the current environment. You've managed to raise a fund specifically for COVID-related projects. How has that played out in terms of what you're seeing? And maybe you could highlight a few successful cases where debt has been used effectively to supplement rather than to completely substitute equity.
Sure. So we are in the process of raising a COVID-19 venture debt recovery fund. We put it out to the larger capital providers, the LPs, as a solution as the market is in a bit of a panic of how to help the venture ecosystem. And our reasoning behind that was several reasons. So we've been investing over the last year and a half in East Africa, and when COVID-19 hit, we were inundated with debt requests. And at first glance, there was a moment of, okay, how are we going to price for this risk? It's kind of off the charts, be it real or perceived, and that's not really fair or possible for these companies to be able to afford that in this time when growth has slowed down. But at second glance, we realized that actually venture debt, as it's evolving on the continent, is a great asset to adapt in a crisis because the fundamentals still hold. And the idea is in a normal, market and time period that you're trying to find the businesses that are going to win. If a venture capitalist is, let's say, 1 out of 10 or 1 out of 20 are supposed to win in their portfolio, a venture debt provider is trying to find that 1 or 2 to back because it does have to get paid back, and you want to make sure you're backing winners. So in a crisis, we're finding the business that can weather this storm, that have a true liquidity crisis, not a business fundamental crisis. And if they had a cash injection, it would allow them to, survive and thrive, as we've all been kind of saying. But it also is a great instrument because there is a bit of panic amongst a lot of the funds, as some don't have dry powder, or they're trying to decide which companies to be able to support, as not all of them are going to survive this. And it allows us to be the kind of objective player in the room to come in and support where it's most needed. But we are having tough conversations with all stakeholders around the fact that not all businesses are going to be able to make it through, and how can we actually support those that will. And our goal with raising this fund that we're in the process of doing is to not only provide a venture debt instrument, but also provide it at concessional debt rates to help alleviate some of the stresses for these businesses as they're pivoting and weathering the storm.
Great. Thanks, Amanda. Elizabeth, very, very simple question. Why crowdfunding? What problem is it addressing, and how is it doing that?
Simple but great question. Thank you, Rajiv. So I'm sure that most people on the webinar have heard of crowdfunding. I will just give a distinction between the types of crowdfunding that are relevant for the emergency response to COVID, which is more donations and sort of working capital based, voucher based solutions that don't typically require any regulations to conduct. And then the types of crowdfunding that are more relevant for the recovery period for COVID, which are SME finance tools. So you have equity crowdfunding, debt crowdfunding, mezzanine based, so anything between debt and equity or hybrid of both. Those forms of crowdfunding are particularly useful. Also invoice-based crowdfunding and asset-based crowdfunding. It's a pretty broad range of tools that can be leveraged, and businesses that are pivoting their model might find in this catalytic crisis that they could also pivot their source of funding, or the way that they're raising funding. So I'm sure as everyone has seen, there's kind of been a generalization of donations-based crowdfunding. Right now, everyone is raising donations. Your favorite restaurants, your locals are asking their regulars to buy vouchers. There's a lot of pre-orders happening with people hoping to get through the period, the sort of lockdown period, and then sort of have some sort of recovery. In parallel to that, as Amanda was saying, and Sarah, that there's a sort of catalytic moment going on here for GPs, right, for fund managers, where they need to be thinking about how to place capital in the recovery period. And crowdfunding actually has a number of features that make it particularly interesting to consider at this point. So obviously everyone knows we're in a risk-off regime. It's very hard to price risk, very hard to put a price on equity, especially at the early stage. And generally that just means sort of less risk capital available. And we all know that there wasn't very much to start off with in the African context. Then you've got a bunch of stimulus plans that are coming out that are coming up against these distribution challenges where they're getting distributed through banks. And we all know that a lot of our SMEs and our startups are ineligible for bank funding, so they're not able to benefit from these plans. And then you've got this sort of widespread economic recession that's inevitable, that's going to bring in these lower valuations. And in the African context, for those of us sort of in the investment space, there is a term called missing middle finance, and this typically describes a deal size that is very small in a sort of a capital climate that is very small, between sort of $20,000 and $500,000. If you think about this new regime of lower valuations, we're all going to be in the missing middle. Everyone is going to not be able to raise as much money because the company is not going to be worth as much. We're in a recession, there's less demand, et cetera, et cetera. So that's very important. You've also moved now into a regime of higher exchange rate volatility. If anyone's in South Africa and you know what I'm talking about, the last few weeks have been brutal. And as governments are sort of printing money, there's just so many sources of volatility that are likely to persist. So we need local currency finance. There is a lot of funds out there that don't provide local currency finance. It's going to be a big issue. And then you've got this issue of the investment processes not being digitized and not being very resilient in a social distancing / lockdown world. You've got this increased reliance on local fund managers, local investors, local angel investors, because these fly-in, fly-out investors are obviously no longer able to fly in. So all of these factors, the risk-off regime, the inefficient stimulus, the lower valuations, everyone in the missing middle, the heightened volatility exchange, and this need for social distancing makes crowdfunding particularly useful at this time, because crowdfunding is a local investment solution. They have digitized investment processes. That's what they do, whether it's pre-investment, transaction, or post-investment. Then you've got new databases of SMEs that are that the banks don't have. So that is why this is a sort of particularly interesting time to consider crowdfunding. I'll stop there.
Great. One more. So I've gone to Sarah. I haven't been able to raise money from her. I've gone to Amanda. I haven't been able to. Where do I go to access crowdfunding?
www.africancrowd.org. So that website, African Crowdfunding Association's website, has a list of our members. Our members are crowdfunding platforms and crowdfunding intermediaries that have committed to a certain level of governance. That is very, very important if you are considering using a platform, especially if you're using one in a jurisdiction where the regulators have not said anything about crowdfunding. I can go into more detail about that, but you'll be able to find a platform that is active in your country on that website.
And from what I understand, there is a lot of work being done around the regulatory side of things, but also ensuring that there's trust in the system, because I think there's a huge case to be made for matching the demand and supply of capital, but ensuring that investors are equipped to take on that risk is a huge thing, and ensuring that there's trust in the system to be seamlessly executed. Could you just share in 20 seconds, 30 seconds, how that is being addressed?
Yeah, it's a great question. So if you're looking at a donations or rewards-based platform, the trust there is released through their ACFA brand. So they've all signed a charter of good conduct. They accept to be assessed according to that, and they are assessed when they join ACFA, and they regularly assess afterwards. If you're looking at doing equity, debt, or any investment-based crowdfunding, you want to look at the compliance of that platform with the regulatory framework of ACFA, which is called the ACFA Label Framework, which is currently being implemented at various stages of advancement with 17 African regulatory authorities. And the furthest ahead countries are Nigeria, the CEMAC region, which is 6 countries in Western Africa, and East Africa, Rwanda, Uganda, and Kenya. So in those countries, your risk is very, very low. But if you are considering these investment-based crowdfunding solutions and you are unsure about anything, your first port of call is ACFA, is the African Crowdfunding Association.
Fantastic. Thank you both very, very much for your time. We are quickly closing in on our time for the session, so I'm going to hand over to Christoph. But again, thank you very, very much both for your time.
Thanks.
Hello, everyone. This is Christoph. So I'm the founder of AfricArena and managing partner at Digital Africa Ventures, which is a new early stage fund based in South Africa and focusing on very much a seed to early stage sector, an interesting sector to start investing in at this time. So we have a few slides to conclude this session. So, I think this was a great session in terms of a first series of 3 events to really talk about practical solution in terms of funding a venture in this difficult period, whether it's through equity or debt. One of the other initiatives that we've been running for quite some time over the last few months is the African Digital Collective. So this is something that you're going to start hearing about more, but it really started at the AfricArena VC Unconference last year in November, where we gathered about 50 of the top VC investors and some LPs active on the continent, and started working about how could we sort of bring more fluidity in terms of deal flow on the continent, especially around deal syndication and things like that. And we realized that a lot still needs to be done in terms of having common term sheets, common due diligence process, and just to lower the costs both for VC and for investors in terms of deal making. And so that sort of coalition collective, it's an open source platform. It includes quite a large number of VC active on the continent, but also some other groups. I mean, you can see here on the slide some of the people that are involved in there, from obviously Endeavor to Founders Factory, some organization like Startup Bootcamp, but also some of the local VC and international VCs and some LPs. So as a next step, you know, we're going to soon launch a platform that's going to talk about practical steps around this. So, you know, some open source documents that we can all work from. So, you know, this is again an open source element. So, you know, with founders, with VC investors, with angels, we're trying to define those sort of open source knowledge documents. So the collective will have a platform that will enable anyone to look at those resources. And some of the other initiatives which this sort of series is part of is to try to connect founders in great need of capital with some investors willing to invest. So from next week, we're going to be running some events in partnership with the BPI on the EuroQuity platform, where there's about 1,900 investors active. And we'll have 4 startup pitching online and some nice, interesting digital pitching platform. And AfricArena itself is going to start in the next few weeks launching its e-pitching sessions with some of our key partners. And so, you know, stay tuned for that. So the next session is on 30th of April. And 7th of May. So we hope that you'll be as you know, numerous as you were today. We had over 160 participants to this webinar and over 170 participants to Tuesday's webinar to continue with this great event. So thank you to all our panelists. It was really insightful and great. And you will have a replay of this session online in the next few hours. And looking forward to seeing you all for our next event. Thank you, guys.